Hello, I'm Madani Arya. This video about retained earnings. How do you work out retained earnings for your business? What is retained earnings? Usually calculated at the end of each financial year by doing the profit and loss account and then deducting any dividends paid out. Then the balance carried forward to the following year and showed in the balance sheet. Usually these funds are used for working capital and fixed asset purchases, capital expenditures, or allotted for paying off debt obligations. Tips for calculating your retained earnings. Take your beginning balance and your net income, subtract any dividends paid, and have your retained earnings for the year. Retained earnings go on the balance sheet as accumulated income for the previous year when constituting the balance at the end of each financial year. That includes the current year's gain or loss and dividends to the shareholders deducted from the total. The balance shows the retained earnings on its liability side at the end of the accounting period. The amount represents the accumulated net earnings made by the company from its start, and it can be a positive or negative number. The amount of retained earnings in the report indicates the business's profitability and can attract investors. At the end of each period, they calculate the retained earnings in the company, usually make the best use of these funds for working capital and fixed assets for the company or to pay the company's debts. Reporting the retained earnings on the balance sheet under the shareholders' equity section at the end of each accounting period also maintains a summary called a statement of retained earnings. To outline the changes in retained earnings for a specific period is a usual process in accounting. The purpose of retained earnings, there are various purposes in retaining, including buying new equipment and machines, spending it on research and development or other activities to increase the company's growth. This reinvestment into the company aims to achieve even more earnings. Suppose a company does not believe it can earn a sufficient return on investment from those retained earnings, that is, make more than the cost of the capital. In that case, they will often distribute those earnings to shareholders as dividends or conduct share buybacks. What is the retained earnings formula? The retained earning formula is as follows. Retained earning is equal to beginning period retained earning plus net income loss, take off cash dividends, take off stock dividends. The retained earning balance may not always be a positive number, and as it reflects that the current period's net loss is greater than that of the retained earning beginning balance. Alternatively, a large distribution of dividends and exceeds the retained earnings balance can cause it to go negative. How will the changes in net income affect the retained earnings? How net income impacts retained earnings? Factors such as an increase or decrease in net income and incurrence of net loss will pave the way to either business profitability or deficit. The retained earnings account can be harmful due to significant cumulative net losses. These items include sales revenue, cost of goods sold, depreciation, and other operating expenses. Non-cash items such as write-downs or impairments and stock-based compensation also affect the account. How to find the net income and the accumulated retained earnings? Can obtain the accumulated retained earnings for the last year from the business's balance sheet for the previous year. The net income or net loss of a company for the year can be found from its income statement. I hope you understood the concept of this calculation of retained earnings. It is very useful for any company. You have to know how much you have the leftover from your expenses and everything. Thank you very much for watching my video. Thank you. Hope to see you in another video. Thank you. Bye for now.